When the world gets weird and the bills get thick, you call on Clint and you feature Dick. One talks numbers, the other talks slick. Two dads, one mic, yeah, this could stick. Clint's crunching figures straight to the point. Dick's just here to laugh in the joint. It's the Clinterific Show, featuring Dick. Dick's quick with a joke, Clint's got the math. Together they'll balance your checkbook and your laugh. They'll talk finance, fun, and fatherly fails, with liquidity dreams and 401k tales. So grab your coffee, join us a ticket, the Clinterific Show, featuring Dick.
Speaking of these nuts, welcome to the show.
Yeah. Wait, really?
Yeah, no, it's time.
Oh, okay.
Yeah.
I mean, usually you give me a signal.
Yeah, no, Anna's finishing up some paperwork, but
Oh,
yeah, she's
hi, Anna.
She's just she can't hear anything but
oh,
yeah,
please spoil it for me.
Yeah, so yeah, welcome back to the Clinterific Show featuring
What's
Dick.
up?
That's
me.
We're in
episode 14
here, yeah, and this week is going to be a real doozy. So our theme this week is bad tax tips that people take as the gospel truth, and they're actually horrible advice.
Yikes.
So yeah, we're going to go through 5 of those, and I actually have a bonus one. So I put together 5, and as I looked over the list, I realized one that I hear all the time, and decided that I wanted to pick that one up as well. So yeah, we're gonna get that done, and then we're gonna
Schitt's Creek reference.
Yes, that is one of them. Yeah, Schitt's Creek has some of the worst and most horrible business expense tax advice that I've ever heard. So stick around. These are going to be some interesting segments. And then we've got the 2 new prices for me to try to guess this week, and I don't know how I didn't think of this for the name of this, because I think Clintorical is kind of an interesting title for this segment, but I mean, how do I miss something so just blatantly obvious like The Price is Right? So that may be what we're going with for the where I try to guess the price of something.
We'll just hope that the ghost of Bob Barker doesn't come back to beat us with his little stick mic thing.
Exactly. I mean, we could call it
The Price is Wrong.
We could do that. That's what we could call it, because based on how I performed last week, that's probably not too far from the truth. So
that scene from Happy Gilmore.
Oh yeah, exactly. Happy Gilmore, where he
Happy Gilmore.
Yeah.
The Price is Wrong.
And that is one of the greatest comedies of all time. So
man.
we got that, and I think part of this the tax tips, we're going to create a new segment and call it "Who Told You That?"
Mm-hmm.
So we're going to try to find bad tips, bad advice, bad information, whatever you want to call it, and it's going to be the who told you that, because it's so terrible that you never should follow that advice.
Never.
And then we're going to wrap things up with our Going Deep segment, which everybody got a little bit of a preview on this morning with Dick.
We're going to go real deep tonight.
Yeah, it's going to be real deep. Yeah.
Especially for the guys.
Some might even say balls deep.
I mean, some say.
So, all right. Well, let's get
stick around and find out.
So, yeah, we're just going to jump right into it.
Boom.
So, bad tip number 1. If I don't get a 1099, I don't have to report that income.
Right, yeah.
Yeah. So,
yeah?
some people may not be familiar with what your different tax forms and things like that are called. So when you're working at a corporation or a business that is paying you wages through a paycheck each week, where taxes are held out, it's going to come to you on what's called a W-2 form.
Oh, well.
So W-2 form means that your employer is responsible for tax payments, and they are responsible for the employer portion of those taxes as well. So when you're filing your tax return, that's where that information is coming from. It's coming from a W-2. Now, if you're doing...
Why is it called a W-2? What happened to the W-1?
So that actually is a good question, and I can't remember exactly what the form was originally called.
And isn't the form that you have to fill out when you start working somewhere called a W-4?
So, yes.
Why is the form that I fill out to work at a place, a W-4, come after the form that tells me how much taxes I owe, which is a W-2?
So
what happened to W-1, and what happened to V1 through 4, or however many? How many revisions of this stuff have they gone through?
So it's not a revision. So one thing to keep in mind from a tax
Big
records
versions.
and tax forms and things like that is we're looking at this from a perspective of what exists now. But when these things started being tracked and passed out and things like that, none of this stuff existed. So originally, they came up with what's called a W-1 form. It's used to have an employer withhold return on your report for income tax purposes. So they're saying, okay, the employer is responsible for reporting your taxes to the government so they know how much to charge you taxes on your income. That got too cumbersome, so they add form number 2, which is
Did
the
not
W-2.
even follow that. I have no idea what the W-1 thing you just said was, but that's okay. This is why we do the show together.
This is largely how the system developed. So, step 1, the business is responsible for reporting your income so the government knows how much to charge you for taxes.
Okay.
That got away from them. Didn't work exactly how they wanted it to. So then they added in what's called the W-2 form, which is your wage and tax statement. So the W-1 form then started feeding into your W-2 statement. Well, as tax code evolves, tax tables evolve. There's different status types. So you're filing single, you're filing married, filing joint, you're filing head of household. All of those things didn't exist originally. They get added to the tax code. Those are different considerations that have to be taken in whenever you're reporting your taxes. So you're
saying they made up this stuff?
Well, yes. I mean, it started with nothing, and then they just built processes around what they thought that money should be based on what kind of revenue that the government needed to operate with. And that grew and grew and grew and grew.
Why didn't the government just go out and get a job instead of charging me for it?
That's a great question. So that turned into each form that you're getting is essentially more information that is either flowing from that form into a previous form or from a lower number form into a higher number. So, all that to be said, a 1099 form is the equivalent of a business paying you where they're not responsible for holding out and remitting taxes to the federal and state government for you. That is your responsibility. So, think of it like this. If I go work at Walmart, I'm going to get a W-2. If I go work for you on the weekend and do some yard work for you, I should get a 1099.
Good.
So, anyway, long story short, just because you don't get a 1099 on something doesn't mean that you do not have to pay taxes on that. It is.
Yeah, I have a.
Go ahead.
I have a question. I have a question.
All right.
I have a question.
Go for it.
So you just brought up something that I remembered. I wanted to ask a question about. So
Go on.
we'll say Joseph. Okay, Joseph. In between, one summer in between jobs while he was in college, Joseph worked for a guy, and this guy, to do like lawn care stuff, and he paid Joseph cash throughout the whole summer, right? And he never got a 1099 for it. So he's liable for that taxes, Joseph?
So there is some level of nuance to that because
They're cut off, or like how much that you get paid?
Yes. So because there was no taxes withheld at all, Social Security and Medicare taxes are the problem. If it was a W-2 that he paid you on, or Joseph or whoever this person was.
It was Joseph. Not me, it was Joseph.
Right, Joseph. If Joseph got paid on a W-2 for that money, then he would probably not really need to file. He probably should, depending on how much it is, because most of the time, the amount of wages that they receive from a W-2 does not just create a tax liability for them. So they're going to get all the money that was withheld from their paycheck anyway. But on the 1099 side, you're going to have to pay Social Security and Medicare taxes, which is 15.3%. So
if he didn't pay me, I mean Joseph, with the W-2, just like cash an envelope at the end of the week. Like, what's the...
Yeah, legally, Joseph is required to file a tax return for that information.
What's the statute of limitations on that?
I mean, like...
For Joseph's sake.
I don't know if there really is a statute of limitations.
Oh,
odds of them coming after you are pretty small unless they watch this podcast.
You mean Joseph. Coming after Joseph.
I'm speaking in generalities. Odds of them coming after you for having a summer job where you make a few $100 mowing lawns... Like,
what if it was more than a few $100?
I mean, I would advise Joseph to stop telling me details.
Well, I mean, Joseph's not here,
right? Obviously, Joseph's not here. But if he was
not
here,
in the room with us.
Yeah, I would tell him not to tell me how much he made or didn't make.
Even if it was like 20 years ago.
Even if it was, well, I mean, odds of them coming after you for something 20 years ago is pretty.
Coming after Joseph.
I'm saying you in the general sense, not literally referring to yourself. I'm talking about Joseph.
Right, yeah, exactly. That's what we're talking about. We're talking about Joseph.
Joseph is probably fine, but
okay, good.
Joseph should keep these things to himself, probably.
Yeah, all right, I'll tell Joseph to shut the heck up.
Yeah, exactly. Yeah. You know, it's like they tell you with the government in a couple other branches. Don't ask, don't tell. I don't know if that really applies here, but it's close. So yeah, keep that in mind. Just because you don't get a 1099 doesn't mean it doesn't need to be reported on a tax return in some capacity. So yeah, bad tip number 1. Bad tip number 2: just write it off. Worst case scenario is they're just going to disallow it. Okay, false. You cannot just write something off and expect the IRS to be like, oh yeah, well you probably just can't deduct that, so we'll just remove that little balance over here, and then we'll adjust your tax return accordingly. Yeah, that's a great way to get audited. And if you get audited and they find out that it was negligence to the extent of possibly committing fraud, they can go back as far as they want. And even if you didn't do anything wrong in those previous years, it's still a pain in the butt to deal with. Because let's be honest, who keeps records of this stuff past about maybe last year?
My wife.
I mean, listen,
should probably burn that stuff.
That is the complete uncommon characteristic of most people. It's just ridiculous how quickly people can lose tax documents and things like that. So
Yeah. I'm sorry, Mr. IRS officer. I lost that documentation in a freak boating accident the other day.
yeah, exactly. Freak boating accident. My computer burned down.
In a boating
What?
accident.
In a boating accident. Yeah. fell out of the
It
boat.
was a houseboat. It was a houseboat.
Why were you
It was
using your
on
computer on
fire.
a boat? I mean, like, why not? Why aren't you?
Yeah. Have you ever tried to play Halo on the sunset across the lake? Nothing
What?
like it, bruh.
Why are you using your computer on a houseboat? Why aren't you? You win this round. So yeah, basically the thought process is pulling in a deduction on your tax return is a free gamble, and if they don't allow it, okay, big deal. You just don't get that. But
So
you can create penalties for yourself. So, for example, if you file a tax return in 2021 and they discover through reviewing by a random audit, which the IRS does for some reason, that the accuracy of the return is incorrect, and it was not necessarily intentional, but it was to the extent of putting information in there that should not have belonged in there and you should have known better, then you can get a 25% penalty. If you knew better and put it in there, it can go up to 75%, plus interest on penalties. If you're real unlucky, then they do expanded audits. It's going to create a mountain of work for you for that piddle-dink little $3,000 that you're trying to create a write-off for. So, yeah, just keep in mind, it's not worth it. Just report it accurately, do it according to the tax law, and you're going to be much better off.
You know, I feel like the more and more you explain some of these things, the less difference there is between a loan shark from the mafia and the IRS.
Oh yeah, 100%. Yeah, they're very, very, very closely related.
By the way, is this what happened to Wesley Snipes?
I don't know if I saw that movie.
No, that happened in real life.
Oh, for tax fraud. Oh, you're talking about Wesley Snipes tax fraud.
Yeah.
You know, honestly, I don't know. Let me see if I can look up what he did, because honestly, I don't know definitively. I heard something about that, but I don't know any of the specifics about what kind of tax fraud that he did or anything like that.
I guess he was trying to ice skate uphill. Some of you might get that.
Okay,
reference.
like this is one of those things that, like, it's just the dumbest thing I've ever seen. Okay, so according to what happened, he had what's called a willfully failing to file tax returns from 1999 to 2001.
So it's like 2 years. 3 years.
Well, yeah, 3 years. 3 years tax returns, and he did 3 years in federal prison from December 2010 to April 2013. That is insane.
Please tell me why it's insane.
I mean, so I know that sometimes tax returns can get away from people. The reality is especially when you're operating, multiple businesses and you have kids and things like that, it can get away from you. Even if you're not intending for it to get away from you, it can. So I understand that, but the reality is anybody who just does not file a tax return, I would argue that they fall under that same umbrella, which does not make any sense to me from a perspective of the logic behind why he did not file those 3 tax returns was he had been given some bad advice from advisors, which is definitely one of those "who told you that" situations coming from the judge. that he argued as a non-resident alien, he was not required to pay taxes on U.S.-sourced income. He was sentenced to 3 years in 3 years in prison, which is the maximum penalty for the misdemeanor charges. And they are misdemeanors. He didn't commit fraud. It's not like he filed a tax return and said that he had a bunch of expenses that didn't exist intentionally. He just chose not to file 3 years of tax returns. I just have a hard time believing that that's the punishment fits the crime.
Yeah, I mean, like, why couldn't he just pay a fee?
Or, yeah, exactly. Just pay the penalty.
I mean, like,
obviously, so he was convicted in 2008 and served his sentence from December of 2010 till April of 2013. So under that assumption, one would argue that not only did he have to pay roughly $7 million in back taxes, which I'm assuming includes penalties and interest through that point as well, but he also had to do 3 years in prison. Yeah, I'm going to have to do some more research into this because this is... Now, I guess I can understand why they might have been a little bit more peeved after 13 years because obviously their initial valuation was $7 million, but after 13 years, it grew to $23 million. So I could see the IRS being a little bit peeved about that.
Right, but it was between 99 and 2001 that he didn't.
Correct. So he didn't file the tax returns for those 3 years, but the problem is the penalties and interest accrue. Which the penalties,
right? The loan shark stuff.
Yes, the penalties apply as of 1999, and then the interest accrues on I'm not 100% sure exactly what their interest accrual system is. I think it's monthly, for each year, and it's not usually an exorbitant amount of interest, but I think it's somewhere between 4 and 8%, depending on the Fed rates and stuff like that. But I will have to look that up and confirm. But I am going to do some more extensive research into this because this is actually interesting to me that it would create 3 years in prison because of a misdemeanor when he could have just filed the returns. I'm having a hard time wrapping my head around that one. So yeah, that's going to be a bullet point for next episode. We'll talk about that one.
You want to hear something else interesting?
Sure.
So he starred in Blade 2 and Blade Trinity.
He was also in Blade 1.
Let me get to it. Both of those movies I feel like were probably pretty good. Those were after 2001. So let's see. Yes. He was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. He starred in over a dozen films after 2001 before he went to prison.
And based on the context of how this is reading, he didn't
like he
completely stop filing taxes at all. He just didn't file them for those 3 years and then started filing them again. So I feel like there would have had to have been a point with, when you're making that kind of money, I would assume that you're having a CPA file your tax return or some kind of, tax returning professional. So what happened between 2001 and 2008 when the government was like, okay, you're done. We're going to nail it to you. Well, by the way, you filed 6 tax returns since then. And we're not going to charge you any penalties or interest on those because you did those correctly. But like I said, I'm having a hard time wrapping my head around that one.
Yeah, there's something.
Yeah,
something's fishy.
Something
anyway,
stinks.
we need to keep going on your list, or we're never going to get done.
Oh yeah.
Sorry, I keep distracting you.
No, you're good. So item number, wrap up. just write everything off. They'll disallow it. That's, yeah, whatever. So don't do that. Make sure that your expenses are legitimate expenses, and
Noted.
if the IRS ever comes back, then you'll have nothing to argue with them about, because you can show them
Right.
that it's an ordinary expense and it's necessary, it's reasonable, and it's business related. Those are the four kind of defining characteristics of what you need to keep in mind. Number 3, buying something for my business means that it's 100% deductible. So for my consulting and accounting business, I work on my phone. I'm on the phone all the time. I spent the vast majority of today on the phone in some form or fashion, whether it was with clients or with software support, trying to fix the tax software that I've been using, things like that. Well, I pay, let's say for the sake of a number, because most smartphones are ridiculously expensive anymore, pay $1,000 for my phone. Well, I can't just say I'm using it for my business, so it's 100% deductible. Well, it's not 100% for my business. That's not the intent of why I'm buying it. Yes, it is used for the business, but it's not only for the business, because I'm not shutting off the phone and not using it after I'm done working for the day. I use my phone all the time. I use it for personal stuff. I use it for personal calls, watching videos on YouTube and TikTok and all that stuff. So what you have to do is come up with a meaningful metric for the amount of business use that item is for your business. So for me, I would say that my business, my phone is probably about 70% business. So if I pay $1,000 for it, then my asset that I get to set up, or whether it's doing it through depreciation or doing some bonus depreciation expense and writing it off in the first year that I get it, I'm looking at $700 of cost that's going towards my business. Not the full 1,000. That 300 is just my personal use percentage for my phone. So, yeah, point number 3, just because you buy it for the business, and a lot of people get lost in their vehicles on this. Like, oh yeah, well I bought this car for the business, and so I'm just going to write off 100% of it. Well, odds are you're probably going to run into some issues especially if that's the only vehicle you have. Because if the IRS ever says, "Hey, what's going on here? You only have one vehicle. How are you getting around when it's not work time?" And you're not working 100% of the time all the time. Now, you could be. That's possible. But the IRS is still going to run into some issues with 100% deducting a vehicle if you only have one vehicle for your business and personal at the same time. So, that brings us to number 4, which is, if my business lost money, then I don't need to file. Well, that's just not true. Profit is not your filing requirement. So if you get no profit, you don't have to file. Actually, in all honesty, depending on the situation, especially if you're married or you have multiple sources of income, if you show a loss on a business and you have a W-2 income, the loss on the business actually is more of an incentive for you to file your tax return, because odds are that loss is going to create a benefit on your tax return by reducing your taxable income and allowing you to get more of the federal withholding that you had taken out of your W-2 paycheck and get to take that money back. So yeah, just don't fall for the trap of, oh, I lost money this year, so I just don't need to file. Not true. And it's especially true from a perspective that they're keeping track of both at a state and federal level of what you're filing and what you're not filing. So don't just neglect 1 year because you had a loss. That's not tax law. So just, throw that one out. And you also can create things called loss carry forwards. There was a huge fuss in the last few years about Donald Trump's tax return, because he has a significant amount of passive loss carry forward, and there's two different kinds of loss carry forward. There's a passive loss carry forward, and then there's an ordinary loss carry forward. And there are certain limitations to both. The passive loss carry forward is capped at like, I think it's $3,000 the last time I looked. So for somebody like Donald Trump, who's a billionaire and bringing in hundreds of $millions of profit from his different sources of income, okay, you know, obviously that $3,000 is a drop in the bucket. Mm-hmm. But he was getting the ordinary income loss carry forward, and he was able to use a significant amount of that to wipe out a lot of his tax liabilities. It is 100% legal. There is nothing wrong with it in any capacity from a tax law perspective. That is the way the tax law was written. So, you know, whether you like Donald Trump or not, the reality is what he did was what any good CPA would do with that tax situation. So yeah, just keep in mind, you know, if you have a loss, that does not mean you shouldn't file your tax return. Make sure that you file it. Number 5 is kind of an interesting one. So there's a lot of TikTok influencers that are talking about this right now. Oh, well, I want to start a business. I'm just going to start an LLC. And if I start my LLC, then it's going to save me a bunch on taxes. Okay, well, first off, no. It's another one of those, who told you that? So there are...
Yeah, who told you that?
Yeah, exactly. So it's one of those situations where there is some level of tax benefit to filing an LLC in the correct kind of format. So if you do what's called an S corporation election, then that becomes, which S corporation, for those of you who don't know, is a small business corporation. It's very commonly used right now because the tax advantages are significant for as easy as it is to do an S corporation election. And it allows some of the flexibility of being a small business while not allowing you, but it also allows you to get some of the better benefits of C corporations. So, things to kind of keep in mind with that. If you do give yourself an S corporation election through an LLC, you're required to pay yourself a salary. But if you pay yourself a salary, as long as it's in the realm of reasonable. So if I have a business that is an S corporation, and at the end of the year, I have $50,000 in profit, and I don't pay myself a salary, so all of that money is just coming straight into my bank account through what's called a distribution. The business is paying out money to go into my personal bank account. Then at the end of the year, the IRS is going to say, okay, well, you didn't pay yourself anything, so you have $50,000 of income that is subject to self-employment tax, which is what we were talking about earlier with Social Security and Medicare, which is that 15.3%. Plus, you've got ordinary tax rates, state tax rates, and all that stuff. But if you say, okay, I have $50,000 of income, but instead of keeping it as income that's paid out through a distribution, I set myself up on a salary. So I pay myself $35,000 a year because that's what I can afford to pay myself through my business. And at the end of the year, I have $35,000 coming to me from a W-2 that had withholdings and FICA and Social Security, Medicare, all that stuff. So that comes out throughout the year. Then it gets to the end of the year when I'm filing my tax return. So my business shows $50,000 of income minus the $35,000 of wages. So I'm at $15,000 of net income. And obviously this is a very extremely simplified tax return from a income and expenses perspective. But you've got $15,000 left over. The only thing that has to have the Social Security and Medicare taxes is going to be that $35,000, and then you just have to pay ordinary tax rates on the money that you got from your S corporation. So that's one of the biggest reasons why a lot of people get lost in this. Well, I'll just start an LLC and it'll save me from all kinds of taxes. There is some significant amount of legwork and paperwork that you have to do to make sure that it's set up properly. And if you do, you will get some benefit from it. But it has to be set up properly. So I would highly advise you, if you're considering doing something like that, talk to an accountant, talk to a lawyer, do some research on ChatGPT or Gemini, whatever, because at least at the very minimum, you're going to have a good idea of a game plan on how to set that up. So those are the 5 big ones. And then the bonus that I brought in, and this was one that is a personal pet peeve of mine. Mm-hmm. It's December, and I've started doing my tax planning way too late. Because let's be honest, if you own a business and you're waiting until December to start planning for how much you're going to owe for taxes, you're a little late to the party. So what you need to do is start evaluating closer to like August or September, and then you're going to get much better planning from a perspective of having time to adjust accordingly so you have enough to cover your taxes. So here's your bonus bad tip. Oh, well, I heard about if I go buy a $75,000 piece of equipment or an $80,000 truck or SUV or whatever, I can just write off that whole amount and not have to pay taxes because I had $80,000 of income that I was going to have to pay taxes on, and now I have $0 of income, and I'm not going to have to pay anything in taxes. So here's the catch. So if you kept the money, the $80,000 in net income from your business, then you're going to have to pay, let's say for the sake of round numbers, between probably around 35% in most cases in taxes. So using round numbers, if you had $100,000 in net income at the end of the year and you had to pay taxes on that, you're going to have to pay $35,000. But you're going to get to keep $65,000. That was how much wealth that you accumulated from that net income. Okay.
Whoa.
Yeah, so $65,000, that's great. You get to keep $65,000. If you go in and say, hey, I want to buy a $100,000 piece of equipment so I can write that off. Okay, well, here's what most people are doing in that situation. They're going and buying that truck for $100,000. So they're taking on a loan. Okay, so first problem is you're taking on a loan at a value of $100,000, which means that you're going to have interest to pay over the next 3 to 5 years or 6 years, however long you set up the term of the purchase for. So not only do you have to pay that $100,000 and not get to keep a dime of it, you're giving yourself a tax benefit in that year, yes. So you're saving that $35,000. But you're also eliminating you're creating problems for yourself in the next year, because now you have an asset that on your books is worth $0 because you have fully depreciated it to give yourself that benefit. So there's no future benefit on your accounting. And I'll just trade in that vehicle on a new one. Okay, well now you're just making the problem even more magnified. Because you're creating a secondary liability, and you've got, if you trade that vehicle in, then you have some level of book gain on that value, then you're going to create an even bigger problem for yourself. So, long story short, this is kind of the rule of thumb that I heard from my father-in-law, who is an accountant. He's worked in accounting for longer than I've been alive, and his rule is a great rule. It's better to keep part of something than all of nothing. So, yeah. That's your
That's
bonus.
fair.
Your bonus for this week
All
is
right.
just because you don't want to pay taxes does not mean that it's a great idea to go spend $100,000 on a new vehicle and put yourself on the hook for a $2,000 a month truck payment. Because the reality is you're going to have to cash flow either one of them, and it's probably going to be easier to cash flow $35,000 than it is to cash flow 100. So. Yep, there's your tax tips for the week. So hopefully that'll help some people out when they're planning for taxes this year and getting their taxes done and creating some strategies for next year. So yeah. So did I get you to glaze over it all there, Dick?
A little bit.
Yeah. I
You-
realize that
this
talking
is-
about taxes is about as boring as you could possibly be. So I tried to make it at least somewhat engaging and entertaining from a this is stupid things that I've heard a lot of people say, and it's unfortunate.
Well, and for me, like that stuff's tough. Like I do glaze
Oh,
over
yeah.
pretty quick when
Yeah.
it comes to tax stuff, but somebody out there, I'm sure, needs to hear about it.
Yeah. Yep.
And I definitely need to learn more about it. So it's good to osmosis
Yeah.
something from you.
Osmosis.
Osmosis.
We're making up words today.
Yeah, we are.
Yeah.
All right. You ready to see if you can do better than last week?
I am. I was not happy with how poorly I performed last week, so I'm hoping that that
what
was
she
just yeah, she did definitely. No, I'm hoping that I can do a little bit better this week. So let's see if I can do better.
Do gooder. All right. So we've got two tax-related products
Yes.
and or services for
Okay.
you today.
I
And-
hope that I have set myself up for at least some level of success with this, because obviously I do taxes and accounting and stuff like that for my job. So I would hope that I can get pretty close to this.
I hope so, because if you don't, I think you're going to be out of a job.
Probably.
mate.
Well, I mean that, or I have a feeling what I'm probably going to do is be significantly lower than what these actually are costing, because I'm basing it off of what I would charge for it.
Come to the Clinterific
Yeah, exactly.
tax firm. I charge less.
Yeah,
I see where you're going with this.
yeah, yeah. This is not intended to be an advertisement.
Right. No advertisements
Wink,
here.
wink.
All right. Are you ready then?
I was born yesterday. I mean, ready.
Why, we know. So scenario number 1.
All right, let's do this.
IRS notice response and resolution.
Oh,
A tax.
I
a
am going
tax
to slaughter this one, because I know how
Not
much we
sure.
charge for this, and I know it's way under. So, because
Okay.
yeah, but yeah, go
Okay.
ahead. Let's hear
All right.
let's hear the details on
All right.
this.
Okay. All right. So a tax professional is hired to respond to an IRS notice allegedly, unreported income or an incorrect tax balance. The professional represents the taxpayer in written correspondence with the IRS. Typical engagement includes reviewing the IRS notice and tax return, reconciling IRS records with taxpayer documents, drafting a formal written response, preparing supporting documentation, and continued correspondence until the issue is resolved.
Yeah. Okay. So this is on a tax return that has already been filed.
Yes.
So this is a situation that I am incredibly familiar with, because we do this a lot.
So you need to give us your price, and
Well, I'll
then
give you
what
close,
is-
because honestly, we don't really have like a specific pricing structure, and most of the time, this stuff is done for clients that have us on a retainer. So we just do it for them. But
Right.
But yeah,
at
so
no additional cost.
right, yeah, which is
dealing
Well, they
with the
get a good
IRS
deal there,
is
don't they?
yeah, they really do. And dealing with the IRS is starting to become a market premium, considering how horrible that whole nightmare of a situation is. Because half the time, well, it's probably about 75% of the time we get on the phone with somebody in the IRS, they either hang up on us or they won't give us any information because they don't have a copy of the 2848 power of attorney form that we have, except for we've sent it to them at least 15 times. And so we send it to them again, and then they hang up on us after they get the form. So, yeah. You have to call between 5 and 10 times per instance to get a situation dealt with, just so we can pay the IRS the money that they say that we owe them. Or that
What the heck happened? I thought that we created a whole nother department of the federal government to deal with this kind of nonsense.
Yeah,
to
we did.
make things
we did.
more efficient.
It didn't. It didn't help at all.
Dude,
Yeah.
I know we said we weren't going to get political on this show, so I'm biting my tongue.
Yeah.
It's hard.
Yeah.
Anyway, so what's your customer price range on this?
So yes, in this situation, based on the fact that the tax return has already been prepared, and this one's hard to do blindly because this is really something that could vary greatly depending on what was being disallowed on the original tax return. But if I was making a ballpark, I would say,
yeah, where are you gonna park those balls at?
I would say probably in the realm of about $800 to $1,000 is what I'm gonna guess.
Now, is that the friends and family price that you give, or
No.
Like...
That's what I think is the market rate for that service.
Okay.
So that's just kind of my guess for that. I have a feeling I'm probably low, and obviously there's going to be some significant range, because if you have a licensed CPA do it versus just somebody who's a tax professional, there can be a 300% variance comparing one to the other. So yeah, I'm gonna go with 850.
Okay, all right. Is that your final answer?
Yes.
Do you want to phone a friend?
I probably should, because I have a feeling I'm way under what it actually is. And if it is way under, I have a feeling I know where it's going to actually land.
Survey says price range is $750 to $1,500.
Okay, so I'm
yeah, you're right.
I'm in the range. Yeah.
Yeah, you're in the range.
Okay.
You're in the range.
Yeah.
Yeah.
Which, like, honestly, because I live in Northwest Arkansas, it probably would be closer to, $800 to $1,000, because cost of living's cheaper here. Whereas if you were in, New York or California or something like that, it would probably be on the higher end of that spectrum. So yeah, hey, I'm comfortable with that. Which, in fairness, I didn't realize when I was pulling these examples, because I'm just having these randomly generated by ChatGPT. Based on what these, market rates and stuff like that are, and not looking at them in any capacity. So I didn't really know what I was setting myself up for, but that was probably a little bit too easy. So hopefully this one's a little bit harder.
I think it'll be a little bit harder, but
okay.
I mean, it's still kind of within your wheelhouse, so it may not be as hard.
And
all right.
I know our original segment was to be like, oh yeah, how can any business justify this from a expense perspective? That was like, if you can't figure that one out,
yeah, I mean, it's not even worth.
You need to call me, and we need to have
about.
some very extensive conversations about common sense and things like that.
I think there's a lot of other things that you guys are going to talk about first, but anyway.
Yeah, exactly.
Like, how'd you get my number?
Yeah. Who is this?
Who is this?
Who told you that?
You did.
Yeah, exactly.
Oh.
All right, let's go on to product number 2.
Okay, small business cleanup and prior year tax return. I'm not sure what you mean by prior year, unless it's. I mean, what does small business cleanup mean to you? Like, if you hear that.
So I'm gonna be willing to guess that I can describe exactly what's going to be on this page as far as what this service entails, because this is another thing that is literally the other half of our business model. So I would be willing to bet what it is it goes in and does a financial, not audit, but it's a financial review back to the years that are being requested. So I'm going to say, for the sake of example, somebody comes in and says, okay, I need you to go back to 2020 and review all of my accounting and make sure we had a guy that was embezzling money and he was hiding stuff. I want you to fix everything and make sure that everything's up to snuff and allocated where it's supposed to be. So I go back to 2020. I review the information. I make sure all bank reconciliations are done. Make sure that any transactions that are allocated to specific categories of accounts are in there correctly. Income is reported correctly. All that stuff. And then obviously file applicable tax returns for the business cleanup, because if they haven't had that information back to 2020, it's entirely possible that the tax returns that were filed were significantly misreported and need to be amended accordingly, things like that. There's probably going to be some level of payroll review, because they're going to have if they do have employees, you would want to review and make sure that all payroll tax forms, whether they're state or federal, had been filed appropriately, stuff like that. So, without getting into the incredibly boring details beyond what I've already caused Mr. Dick here to glaze over.
Glazing is starting
exactly.
again.
So,
okay, so, all right, so let me read the description here.
Okay.
Small business owner failed to maintain books and did not file a required prior year tax return. So you're on the money there. A tax professional is hired to reconstruct records and prepare the delinquent return.
Okay. So it's just one tax return, correct?
I mean, in this example, yes.
Yeah.
That's what it's saying.
Okay.
So typical engagement includes categorizing a full year of bank and credit card transactions, reconciling accounts, preparing financial statements, preparing and filing the prior year tax return, and limited guidance on penalties and payment options.
Okay. All right. So for a situation like that, because the term small business, it really can mean a very wide range of different things. So you could be you can still be classified as a small business with $20 million in revenue and 6,000 transactions a year. That's a lot of transactions to go through.
So what makes it big?
So I believe a medium-sized business is when you get to the 100 million in gross receipts. I'll have to look at the actual definitions, but I believe you're still technically in the small business realm. Anything sub 100 million.
Interesting. So does that mean that like some of these like influencer YouTube streamer guys that make, they can make like up to like, let's say they make over $100 million a year by themselves, are they they're a medium or large business?
Yes. So
just themselves?
Oh, sorry. It's 50 million.
For what? So a medium size?
Yes. So 50 million is the threshold for what's a mid-sized mid-market business.
Mid-sized.
And that
mid-sized
mid-market goes from 50 million, hold on to your butts, to 1 billion in gross revenue. Yeah. You're looking at a huge gap, because small business is basically from 0 to 50 million, which is still an enormous jump. And then from 50 million to 1 billion is mid-market. And then obviously when you get to 1 billion plus, you're in large. Or large or big business, yeah.
the triple venti businesses.
Most of the time, you're not really considered a small business unless you're sub 10 million. But yeah.
Well, then what's between 10 million and 50?
Sorry, 10 million, not billion. I think I said billion there. It's sub 10 million.
No, you said million.
Okay.
So sub 10 million is a small business.
Technically,
but a mid-size
from the general statements, technically 10 million or less is actually considered micro. So then once you get to 10 million, 10 to 50 million is small, and then mid-market goes from the cap of small, wherever that starts, whether it's 10 or 50, and it goes all the way up to 1 billion. So, yeah.
I feel like micros kind of a negative term there,
It
like,
is. Yeah, that's definitely a clinical definition.
It's not the size of your shares in the market.
Yeah,
it's how well they perform.
If I'm making $9 million a year in gross revenue, I don't care. You're not going to call me micro because I'm going to feel pretty good about what I'm doing. So,
yeah, I might still call you micro, but anyway, you're
so yeah. Anyway, the price, my price guess.
Yeah.
Largely, this could depend on how far back you're going as well. But like I said, we're looking at small businesses here. I'm going to assume, for the sake of this example, that we're looking at something that is, let's say, $1 million
a micro business.
Yeah, like a micro business. So, like, I'm going to say under $1 million in gross revenue for the year. I'm going to go with, it's just the business return filing, correct?
Yes.
Okay.
I mean, it doesn't say. Yeah, the small business owner failed to maintain books.
Okay.
It's a business filing.
Yeah. So I'm gonna guess probably in the realm of about maybe 1,500 to 1,700 for a situation like this.
Is that the friends and family plan, or is that what you're saying on the market?
I think that this is going to be based on the market.
Okay.
But yeah, I'm going to say let's say 1,600.
Is that your final offer?
Sure.
The price is wrong.
Yeah, I'm too high, aren't I?
Yeah, no, you're too low.
Wait, really?
Yeah.
Oh my goodness.
Survey says 2,500 to 4,000.
Okay, so see that man, like I thought about saying about 3,000, and like I said, this is largely dependent on the size of the business, because if I'm dealing with a business that has $100,000 in gross revenue, then odds are the transaction count is going to be pretty nominal. Where if I'm dealing with somebody in the million, that's 10 times.
Or 100 million?
Well, yeah, exactly.
No, that's a mid-size. That's a mid-size. Sorry.
No. To 1 million.
I thought it was 50 million.
No, yes, technically
business.
it's still technically it's still small business up to 50 million. Yeah. But yeah, so yeah, like I said, I told you I was probably going to be low on this, cuz the reality is that's probably what I would charge to go back and do something like that. And yeah.
I mean, I know I'm broke and poor, but man, $50 million is a lot.
It is.
Now, I know for some people that's like nothing.
Which, and here's the thing that a lot of people don't take into consideration. So, gross revenue does not mean that's how much money was made. This is how much money you brought in. So, if you sell $15 million worth of product, services, whatever, there's always going to be costs associated with. So, you're going to clear,
right.
In some instances on a good day, you're going to clear, let's say 15 to 25% in most product industries. Food, you're lucky if you're hitting 5. I mean, even some of the best restaurants on the planet, you're going to be killing it to do between 5 and 10. And then something like a gas station. Gas stations are operating at like 3% on the gas. They're making their margins on the crap.
No freaking way. No freaking way.
No,
the
way
they charge me out the nose for filling my tank.
Yep. You're dealing with gross
sales, like
It's gross.
quantity
It is
of
gross.
sales. So they're making their money off of the quantity, not the large margin per product. But yeah, so somebody who has 50 million in sales might only be clearing 7 million.
By clearing, you mean like a net profit?
Yes, net profit of 7 million. Which, that a business that's that size likely has a few different owners. It's not super common for a business that reaches that level to have just one owner because, typically being able to scale to that size, you're going to have a few specialists with different, expertises and things like that. Not saying it's impossible, you can do it, but it's more likely to be, between 2 and 10 partners for a business that size. So, yeah. So, well, I feel a lot better about this week than I did the previous week. And like I said, I figured I was going to be low compared to what the market rates are because it's hard to really dictate exactly what you would charge. And I don't know, my business model is typically built around trying to reach people where they're at. And I would rather help somebody for a little bit less money than for them to get put in a worse situation because honestly, they can't find somebody who's going to do it for a price that they can afford paying. So I guess the price was right once and the price was wrong once.
And I guess if you're looking for a tax specialist and you're tired of getting fleeced, then check out.
Apparently, I'll charge you way under what the market rate is. Yeah.
Call Clint and Sons at 1-800-6969 and he'll give you a better deal.
Yeah, that's not even a full phone number. Oh man. All right. Well, yeah, I think that brings us to our.
Sorry, it was 1-800-420-6969.
Oh, yes, of course.
Sorry, I forgot that.
That was the rest. So I guess we're ready to dive deep.
We're gonna go deep.
Go in our deep dive. Yeah,
we're gonna go really deep.
Go deep. Let's go. Good. What have you got for us this week, Mr. Dick?
Oh man, this one's gonna hit hard for some of us.
Listen, I would rather hit hard than be too flaccid.
I mean, that's always my motto, and you go in hard and you go in fast, and then you take a nap. Anyway, are
you done? Well, that was worse than the first time. Why did I let you do that again?
Because
I have a business worth $1 billion.
$1 billion.
That kind of money doesn't exist.
So a couple of days ago, I watched a video. I found out that some of my topics come from videos. I spend way too much time on YouTube, by the way. Let me tell you, there's a YouTube outage. At least there was. If you check,
I noticed that. Yeah, I tried to pull up a video for my son to watch, and I could not get it to turn on at all. So
yeah, it seems to have abated now, but around 5 o'clock there was a huge spike. For those of you who don't know, there is a website called downdetector.com, and you can search for any kind of services that typically use internet connectivity, and everything from Google was
it's for internet
spiked.
Connectivity. Okay, I got you.
Well, I mean, like internet services like Google, YouTube. I mean, they've got all.
I don't know why we're tracking them, but
Blizzard and Amazon and Verizon, Steam, all of it. Like, you can just type in a company if they have to utilize the internet to work. then they'll probably show up here. Anyway,
Interesting.
so a whole bunch of like the Google stuff was like spiked around
Yeah.
5 o'clock today.
Well, I have
oh,
a
man.
TCL TV that
Yeah.
is like a Google TV, and it logged out of everything.
Right, my account was missing on our.
Well, not just YouTube. Like it logged us out of all of our apps.
Oh dang!
Yeah, so because I guess because it's a Google TV that it just it kicked us out of every streaming app, every service, everything that we have logged in.
Nice.
So it's going to take me like 3 to 5 business days to log back into all that crap. On all, because we have 2 of them. So
Thanks, China.
yeah, way to go, TCL.
That's why you buy Korean. Yay, Samsung.
You know, I learned this the other day. I don't think Samsung even is Korean.
It is Korean. I think they make their stuff in Vietnam though. Some in China too. Samsung is Korean.
Okay, so maybe there's something else that wasn't Korean. It was something that I have believed was Korean for like the vast majority of my life. And it's like, yeah, this is made here. Yeah, I guess it's not Samsung. Anyway, go ahead. Going deep. YouTube was down.
Yeah, YouTube was down. I was sweating. It was bad. And I realized, holy crap, like...
What? Why were you sweating?
Oh, because, all right, so our TV, right?
YouTube was down, so I was sweating. Why?
We're still on a tangent here. Sorry, I'll finish this up. So what happened was I went to log into my account on YouTube, right? On our TV. And my account was missing. My wife's were there, but mine was missing.
Yeah.
And so I was like, well, that's weird. So I went on my phone to try and, resync the, whatever. And it was like something went wrong. And then I noticed nothing was refreshing on the YouTube app for my phone. It was like, did my account get hacked? I was a little worried there because I totally don't use the same password for Google that I use for everything else.
Oh, yeah. Yeah.
Rainbow Pony 6969 is definitely not my password for too many different things.
I have just come to the realization that with advances in AI and the fact that if a hacker really was gifted enough to want my information, my password being a little bit stronger than other passwords is not going to stop them. And if they figure out one of them, they figured out all of them.
Right. Well, I mean, that's why you start adding in other things like two-factor authentication.
Sure.
Which I try to do as well. But
yeah.
Anyway, we're getting off topic again.
Yeah. Speaking of segues,
and did you know that one of the co-founders of Segway died on a Segway falling off of a cliff?
And you know what? He wouldn't have died if he had two-factor authentication. Coming from our sponsors.
From our sponsor,
Yeah.
Proton.
Proton two-factor authentication. Download it on your phone now. It's only $5.95, but if you use our QR code, it's still $4.95. If you use our QR code, they'll charge you more and give us the difference.
We'll say, make sure to type in the coupon code with Dick at checkout.
We are totally doing that. When we start, that's going to be our coupon code. Anybody who wants that to be like I am totally happy when we get big enough to start having advertisements on this channel. We are 100% having a coupon code with Dick, and sometimes we'll do them without Dick.
But those are going to be like the not so great coupon codes. Like a 30, like 25 to 30% off is definitely with Dick. But if it's only 10%, it's without Dick.
This week was sponsored by Papa John's. Use our coupon code Papa John's with Dick. Last time I got pizza, it was disgusting. This time I want it without Dick.
Go to www.papajohns.com/with Dick.
Hey, does this pizza look weird to you? What kind of hot dog is that? Wiener schnitzel with dick.
Just don't get the cheese stuffed ones. It's awkward.
Oh my goodness. Oh, that's amazing. Yeah, we're definitely doing that. So stick around. You're gonna find out when we hit the big leagues that all of our coupon codes are gonna be with dick.
Drop a comment and tell us which websites need to be with dick and which ones should be without.
Yes, make suggestions and we will follow that to the letter. Oh, that would be amazing.
I'll tell you, one I would like to see without dick is YouTube TV. Can you please keep YouTube TV without dick? Especially the kids' profiles, for goodness sake.
Oh, man. Oh, goodness. That's hilarious.
Okay.
Oh. I mean, we do have the Epstein list now, so we can have selective promotional codes depending if your name's on the list.
If your name's on the list, you're definitely getting without dick.
Oh man.
Yeah.
Oh, anyway. Okay. So, yeah, let's get back to the serious segment after that complete train derailment.
Oh man. I needed that laugh. Thanks.
Yeah.
Well, all right. So this morning I was talking a little bit about what you do for yourself that you also do for other people.
Yes.
Right. And a couple of days ago, I saw this YouTube video, which I won't go too deep into it because that's how we got off on this tangent.
Yeah.
But sometimes things pop up on my recommendations, and I'm like, well, that sounds interesting, and I'll watch it, and it will kind of get me down a rabbit hole of thinking.
Oh, yeah.
Which is where we're at now. So I watched this video by a gentleman named Seth Capehart,
Okay.
MD.
I feel like that name sounds familiar. I've probably seen some of his stuff before.
Probably. It seems like the algorithm might be pushing him a little bit. He's got 250,000 subscribers,
Okay.
and this particular video has over 300,000 views.
Right.
It's called The Longevity Lie No One Talks About.
Okay.
And he's talking about how, we've had such a health-focused like environment. The problem is that part of the problem is that medicine, like modern medicine, is, and to quote him, incredibly good at keeping people alive, but not very good at keeping people healthy.
Yeah.
The company that
it's like, okay, yeah, we're gonna treat you with medication, and then we're gonna give you medication to counteract the side effects from the other medication.
Yeah, there's a lot of that. So the company that I work for, we support various other companies. So we're a service company, and we support various hospitals and like law firms and just like a lot of random stuff. But I've been working in conjunction with some of our hospitals, and so like I see some of this stuff firsthand, which is kind of why this video resonated with me. So it's like you go into some of these hospitals and you see these people who are alive, right? Medicine is keeping them alive, but are they really living anymore?
Yeah.
And so that was kind of part of his point, was that medicine will keep you living, but it won't keep you healthy. So what should you do to stay healthy? Because the reality is that you will probably live a long life, but you're not necessarily going to live that life out in independence. One of the things that he says is that longevity is not survival at someone else's expense, which is what a lot of people turn into. And
it's like, I'm still alive, but I require constant care to make sure that I'm alive. I mean, I watched I think Anna was watching an episode of Grey's Anatomy or something like that the other day. Oh no, that's not what it was. It was a new HBO show called The Pit. And
Oh yeah,
Yeah, it's gotten some really good reviews, and it has I can't remember what the guy's
Noel
name is.
Wiley.
Yes, from he got famous on ER back in the 90s. Anyway, yeah, so it was kind of an interesting show to watch, but it's basically just a day in the life of this medical staff in an emergency room in, I think they're in Chicago or something like that.
Yeah, Pittsburgh, I think actually. That's why I called the
Oh,
pit.
Pittsburgh. Okay, I got you. Anyway, so yeah, he's they're going throughout the day, and I believe it's pretty early in the day, probably around 9 to 10 o'clock in the morning, and the ambulance rolls up and brings out, and they've got this. I don't know what it is, and I don't even know if these things are actually. I would assume they're probably real because a lot of these medical shows do a pretty good job of consulting with actual medicine facilities and stuff like that to use realistic devices, and it's a robot that does chest compressions. So it's kind of strapped on the top of the gurney that the person is laying on, and it's doing chest compressions the same way that a person would, but it's just it's just a little kind of a chest device. It sticks off pretty good because the arm has to come up and down quite a bit, but I just was like, oh, that's an interesting thing to watch. But ultimately, why I'm bringing this up is because we're talking about from a perspective. This was an individual who was obviously in their late stages of life. They looked like they were probably in their mid to late 80s. Had already, they lived a full life, and by default, because they live in this assisted living community, the nurses do all their checking, and they check the room and find out this person is not breathing. They call paramedics, and then we have to spend thousands of dollars and stuff like that when basically what's happened is this person just died of old age. And so it's incredibly unfortunate because yes, I understand that, we don't want to lose our relatives and we don't want to lose our loved ones and things like that. And we don't want to think about the reality of death, but ultimately bringing that person to life, odds are you're probably going to cause some significant damage through chest compressions. I mean, I think it's very common for ribs to be broken. I can't imagine being that age and having my ribs just shattered and being in pain for the rest of my life because I'm already, 1 foot in the grave anyway.
Right.
Like, why didn't you just let me die?
Yeah, when I've taken CPR classes, they almost say that it's almost like if you're not breaking ribs doing chest compressions, then you're not doing them hard enough.
Yeah, exactly.
Because you have to put that much pressure on it too, because you're literally pumping for the heart.
Yeah.
To get blood moving, to keep the brain alive is brain oxygenating.
Exactly.
Is what you're doing.
Yeah.
So but you're right. Like, what kind of living is it going after that?
Yeah.
And this is also why DNRs exist, to not resuscitate.
Right.
In that case, obviously the show is going to take some theatrical and artistic license there.
Yeah.
But I would think the reality is, like, that guy probably had a DNR hanging around his neck or something.
Yeah.
They would just be like, all right, well.
Which I believe that actually did
Taylor.
happen. I think the person did have a DNR, and so they realized that, and they were like, okay, we're not continuing to do this. This person's dead.
Okay.
So.
Right. So anyway, getting back to the whole purpose of this is like now, and I'm looking at some of us are dads who are out there and maybe live kind of sedentary. We're not meant to be sedentary, right? And so Dr. Capert's thing is like, you have to move. You need to eat healthy, yes. You need to get good sleep, but you got to move too, because like if you don't, then you're going to be trapped in a state where you're going to be taken care of more than you by other people than by yourself. And that's not, like I was saying, like, what do you do not just for yourself but for those around you? It's like you got to take care of yourself so that you can enjoy the potentially your great grandchildren for a period of time, but also so that your own children don't have to deal so much with the burden of having to help you go to the bathroom several times in the middle of the night. And, obviously there are things that happen, like conditions that are perhaps genetic that you can't account for, that are going to come no matter what. or things happen, accidents happen, etc. And
Right.
we're not talking about those kinds of things. We're talking about like, what do you have, what is within your ability to change and to make better.
Mm-hmm.
And if you don't start now, then when you get to that point, like, you're going to have a bad time, and you're also going to make everyone else around you have a bad time.
Mm-hmm.
And another quote that from him, that one of the things he said that really stuck with me, because it's something that's big for me too, is this idea of self-discipline. And he said the opposite of discipline isn't freedom, it's dependence. If we aren't disciplined
Yeah.
now to do the things we should be doing to take care of ourselves, we're not going to have freedom later. We're going to be dependent on those who can do those things for us that we no longer can do for ourselves,
Yeah.
because we weren't disciplined enough to preserve our health.
Yeah.
And ultimately, I don't know if he's coining this phrase or this term, but I like it. And we need to stop thinking about having a lifespan and start thinking about having a health span.
Yeah. Yeah, that's actually a good concept to take into consideration. I
Right.
have been having a lot of conversations with Anna recently, and I know about when we started this podcast, Anna and I had actually started a gym membership, and we were going very regularly. We have not been back since her surgery. The doc, she did have her 2 week post-op appointment on this past Friday, and she did get the
Nice.
green light to start doing some light exercise, basically
Heck
just
yeah.
meaning is like walking. She can't lift any weight or anything like that for the full 6 week span because of the hernia repair. But still, like, just being able to get out and move a little bit is opening us up for some opportunities to go get in back into the swing of things. But
Yeah.
I was thinking about it the other day, and the reality is, right before Anna and I started dating, I had kind of gotten on I'm sick of, because at that time I was working tax season at a CPA firm, and just, eating horribly. I was eating fast food all the time, and largely what my problem was is I was so sedentary because, I'm working 80 to 100 hours a week doing tax returns and barely even seeing the sun. After tax season got over, I think I was at my heaviest that year, and I think I was right at 250, and just I felt like garbage. I used to play basketball fairly regularly. I used to run, between 2 and 4 miles a day. I've always enjoyed running and stuff like that, and so I'd gotten to a point where just running, it hurt. I mean, I didn't even want to do it. And so I realized, hey, this is not going to get better. And, I started trying to do it through the diet thing. I went on a couple fasts where I would do
I
the
remember when you
Daniels
do those
the
things.
Daniels diet
Yeah.
fast, where you're like, I'm only going to eat fruits and vegetables, and no preservatives, no meat, no nothing. And honestly, they did a really good job of kind of getting me a jump start of fixing my metabolism a little bit, because largely, when you eat 5.5 months straight of McDonald's and Subway, you know your immune system, I mean your metabolism is shot. But yeah, so anyway, after I finished that tax season, I was like, okay, I'm done. I'm sick of feeling like garbage all the time. I'm going to start eating better, but I'm also going to intentionally create physical activity for myself. And so I started walking, doing push-ups, jumping jacks, just general motion, moving,
Right.
different muscle groups, and getting the whole body moving rather than just, like, oh, I'm going to go
Yeah.
do chest, legs for a day, whatever. I was trying to keep a variety of exercises in there. And my goal actually at that time, I had really just always wanted to be able to do 1,000 push-ups in one day. So I started doing, push-ups and stuff like that. And when it got to, because I met Anna in um, October of 2015. And I weighed 250 in April. And in October, so what, 6 months later, I was at 192. And that was largely from just, like just doing general exercise 3 to 4 times a week, where I would go walk regularly. I would, I was eating a little bit better. I've always kind of eaten about the same amount. If I go to Chipotle, I'm going to get a burrito. I'm going to get it the same way every time I go there. I really didn't change a lot about my diet. It was more so just being way more intentional about being more physical. And, I started, when we started working out again in November, it's the same kind of thing. I started feeling better. I've lost about 10 pounds since November. I think I was at about 245, which I was getting close to the biggest I'd ever been. Yeah. But yeah, so I lost about 10 pounds. So I'm right at about 235 now. And my goal is to get down to about 190. If I get there, I'm gonna feel pretty good.
You're gonna be skinnier than me then. I think I'm at I'm at my heaviest
Really?
that I've ever been. But I also like where I'm at. Like,
well, there's a difference between because you're working out what, 5 times a week now?
6.
Oh, you work out 6 times a week. Yeah, so
6 days a week, yeah.
You're if you weigh 210, then yours is, which I don't know how much you weigh, but like if you weighed that, you're significant.
224.
224? Yeah, that's but I would say that most of that is coming from muscle, whether mine is coming from this ginormous gut that I've got, which is why I have the camera set where it's at.
Getting your best angle.
Yeah.
Actually, no. And then that was like one of the other things, like Dr. Capert was talking about in that video, is like one of the things that I think people forget to do is to prioritize more protein. Especially because after the age of 30 and 40, like the percentage of muscle you lose every decade increases every decade as well. So it's like,
especially if you're not using those muscles.
Right. So your capacity for building muscle decreases, which is part of the reason why I'm hitting the protein and the weightlifting as hard as I am, because I want to have a good foundation. So when I hit some of those ages where I'm not able to build as much, I still have. I mean, you look at guys like, even though he's all wrinkly and he's got a little bit extra skin, Arnold Schwarzenegger is still pretty jacked for being in his 70s.
Yeah.
I mean,
it's
obviously,
crazy to say that he's in his 70s, but yeah.
Yeah, he's a far cry from where he was in his late 20s and early 30s when he was winning back-to-back Mr. Olympia titles and starring in every action movie and, dancing his pecs, and holy crap, the guy is an icon. But he's still probably stronger than me.
Yeah.
So,
I know he's stronger than me.
Part of my journey started, when the wife and I decided we were going to have kids, and when she was pregnant, it was like, well, how am I going to be able to keep healthy and strong, well into their adulthood, so that I'm not a burden to them, and I'm actually, can enjoy that time. Because we didn't have kids like super late, but like we were in our early mid-30s when we had kids, so you can do the math on that.
Yep.
So it's like by the time our kids are having kids, I'm gonna be in my 60s.
Yeah, I think I was 34 when Lincoln was born. So, no, I definitely get it there, and that's part of the reason why we started exercising as well, because you start to feel like crap, and it compounds on itself. And it does not get better. It's like, oh, I feel like crap, so I don't want to go exercise. Well, no, actually, I'm tired all the time because I feel like crap because I don't get up and just force myself to go get out there and burn some calories and get some movement going. Create some circulation.
And I need to probably do a little more cardiovascular training in my regimen, my routine. I hate cardio. I know Clint and I are like opposite. Clint loves cardio, I hate cardio.
Which I think is a lot of the reason. Which I'm not trying to make an excuse here. I've analyzed this myself, and I think that's a lot of the reason why I eat the way that I do, because I'm used to running. Like my metabolism was created in my teens and 20s when I'm running all the time everywhere, and so as soon as I stop that, the weight starts going up. But
absolutely.
But with this workout regimen, I've started doing. I'm trying to do hybrid exercises where I'm doing, high levels of reps for the weight training that I'm doing, but I'm also doing running and jogging and stuff like that. Because the reality is, and with the amount that I'm working out, I don't think there's ever going to be a point where I'm going to be super just, bulked up or anything like that. But as long as I, eliminate some of
not with that attitude.
Yeah. Honestly, I don't want to be, because if I got to a point where like I can't put my arms down because my lats are so big, like that would just drive me nuts.
I wish I could have lats that big. I wish I could have lats that big.
Yeah.
I mean, I did. Today was back day, and if there's one part about my body, like lats, I wish that I could build lats. Maybe I'm just not doing the right stuff. I'm probably not doing the right stuff. I'd love to build my lats more.
Yeah. But I also have tried to focus on building functional muscle as well. So instead of it just being like, oh, I can do a bicep curl like this with 95 pounds in each hand. Okay, well, yeah. Right. But how often are you doing that? Like, I did I was doing some research the other day, and I was looking up what percentage of men in each age group are capable of picking up a bag of, like an 80-pound bag of cement and carrying it 20 feet and doing that multiple times in a day. And so, it was breaking it down, like what percentage of men in each age group, about every 10 years, give or take, to be able to do that. Because I would consider that not ridiculous in any capacity. Like, I don't feel like 80, I mean, obviously, I have worked in construction in the past, and I know that an 80-pound bag of cement is
80 pounds.
It's what I'm saying is it's heavy. Like, that's not nothing, but to be able to squat down, pick something up with your hands, lift it up to your shoulder, and hold it here to carry it 20 to 30 feet, and then set it down, and then go back and do that, let's say 5 to 10 times. What percentage of each age group would be able to do that? And I was honestly surprised at the estimates that I saw about how few people actually could do that. I think even in their youngest, prime age group, which, I arguably is your late teens and 20 to 30, basically. So, 18 to like 28 is prime. From most people's information. And I believe the numbers for that age group were only like 45%.
Wow.
Yeah.
I remember we went on
crazy.
I went on a mission trip when I was in my early 20s, and I was carrying 80-pound bags, one on each shoulder, up a staircase to build a second floor for a school. Multiple times a day.
Yeah.
Maybe I'm just weird. Maybe I'm an ox.
Yeah.
But I feel like I could probably do that. Even now, like I feel like I'm a lot stronger now than I ever have been in my life.
Yeah.
This morning I was deadlifting over 400 pounds without too much difficulty.
Yeah.
So
So what this said, let me see. I found the numbers. I pulled them up. Okay.
But the percentage of men
The percentage of men who can do that task in 18 to 29 is between 40 and 55%.
Okay.
That's what it estimates based on that. 30 to 39 is 35 to 45%. So I'm going to say average of 40%. For 18 to 29, it's an average of 47.5%. So less than half. 40 to 49 is 30%, so less than a third. 50 to 59 is 20%, so a fifth. 60 to 69 is 8 to 50, which this is where it's like, okay, it's super impressive at 5 years old for you to be able to do that, and it drops off significantly until you get to about 60, and then it starts going back up, and it's like, okay, you're an 85-year-old dude, you're able to pick up an 80-pound bag of cement and carry it around. Wow, good for you. You know.
That's gonna be me, man. It's gonna be me.
I hope so, because
it's gonna. I ain't going quietly.
Yeah, but that's what I'm saying. So I'm looking at that. I'm like, I mean, the reason that I did this as the example is because you're using multiple muscle groups. It's not just, I can lift this up with one hand and do it that way. Whether you can lift up 80 pounds with a dumbbell is irrelevant, because cement, concrete, whatever, when you're lifting a bag like that, it shifts, it moves, and everybody knows that if you're picking up something that is rigid versus something that has flexibility, it makes it more difficult to carry. So you're having to use a lot more stabilizer muscles. You're using back, shoulders, arms, hand grip, all that stuff. And so because of all these different factors that you're taking into consideration, and then once you get it up to your shoulder, walking that far, because you're having to engage your cardiovascular system to pump enough blood to keep everything going while you're carrying it. And then also, obviously your joints and bone density have to be at least tested enough to be able to hold a weight that heavy. And so it was just one of those things where I was like, okay, I would assume that a significantly higher portion of people should be able to do that. And I didn't realize that I was in a higher percentile just being able to do that at all. Because, I mean, like my kids are 5 and 4 right now. My son weighs about 43 pounds, and my daughter weighs like 32 or 33, something like that. Last time we weighed them. I can carry them both at the same time fairly easily, I mean, obviously you're wrangling them while you're holding them, but picking them both up at the same time is not anything crazy. So that was why I was like, okay, this is kind of an interesting thing to note, is that strength levels have gone down so significantly, because I'd be willing to bet that if these numbers were adjusted for kids from the 50s, it'd be way higher. It would probably be closer to what the opposite of the 80s. So there'd be 2% that couldn't.
Well, sure. I mean, I think things have definitely become easier. We're not as industrialized as we used to be.
Yeah.
So some of those things that used to just naturally build strength is not something that we do as much anymore. That's why, I think it's like I do a desk job, which is, one of the reasons why it's really important to me that I get out and go to the gym 6 days a week.
Mm-hmm.
And I do base my workouts around compound exercises.
Yeah.
The four most, the four core compound exercises being, your bench, deadlift,
Lengthen,
squat, and
elongate,
and the overhead press. So I start with
Pilates.
One of those major. I've never heard of her. No, actually, Pilates kick my butt, man. I can't do that.
Dude. Yeah, there's people that knock like yoga and stuff like that, and it's like, okay, listen, when you have not been stretching, that is killer.
Dude, I
try to do stretching exercises every night, because I realize that that is one thing that I've definitely started realizing recently, is that I've been getting significantly more rigid in my joints and stuff like that. Although, just to kind of get on this health kick, I don't know if you've ever done any experimenting with this. I've recently started.
I do some experimenting.
I'm not talking about your college years. No, experimenting with actual fasting, like actual no food, just water,
Okay.
for extended periods of time. So
No, I don't. I like fun and joy in
yeah,
my
no,
life.
trust me,
So
I love food, and but I'm
we
telling you,
know.
yeah. If you can't tell, I love food, but
I like some
I'm
great
telling you right
videos.
now, I've done two. I did one for about 36 hours, and that was the first one that I did. I'm trying to work my way up to a week, um, but the last one I did was 3 days. So I think it was like I think it ended up being like 78 hours, I believe. Um, because it was like a little bit over because I had done my last meal was like a supper, and I did an early supper, so it ended up being just timing windows and things like that for what I was doing that day. But I'm telling you right now, like I'd read a bunch of research on what it does and watched probably 200 different YouTube videos about the benefits of fasting and things like that, and I was like, no, there's no way it's going to be that beneficial. I'm telling you right now, day one was a nightmare. Um, like the caffeine withdrawals, because I love Dr Pepper and all that junk, and so the caffeine withdrawals hit me really hard that first 24 hours. But after I went to sleep, because basically the first 8 hours you're asleep, so you're sleeping through a lot of the uh initial hunger pains that you get. And once you get past the first 24 hours, it actually gets significantly easier. But after the caffeine headaches were gone, like I don't necessarily feel like my hands are like super rigid or anything like that, but it was crazy at the end of day 3 how my fingers were like, oh my goodness, like what is happening? I didn't realize that I was so rigid, and that my fingers just felt amazing. Like just to be able to, go like this and not feel like there's any level of stiffness at all. I could not believe it. And I tore some ligaments in my ankle in college, playing basketball, and I haven't really done probably what I needed to repair it correctly, but it is what it is. That's 20 years ago, and probably not a lot I can do now. But anyway, long and short, I did not have any level of pain at all in my ankle that I'm normally used to having, at least some level of, like, if I step wrong or rotate my ankle wrong or something like that, there's just a little bit of stiffness there. It was like gone. And I was like, man, I'm doing this again. So I'm going to try to work my way up to about 7 days in a fast. And I'm going to try to do at least 2 a year. Just because based on everything that I experienced just with that 3 day, I think 5 is probably the sweet spot. If you get to 5 days, that's going to give you some really good system cleaning benefits. But I just want to see if I can do it to 7 days. Plus, I'm going to save a shit ton of money because because food is so freaking expensive right now. Yeah. I've tried this new thing called being poor.
Are you concerned about prices of groceries?
Yeah.
Have you ever tried not eating?
Yeah. Just fast. Yeah. Is that what they're calling starving now?
Added benefits are weight loss.
Yeah. Yeah. That's one of the funniest things about our society now is this is the only time in human history where you can be poor and fat. Which is crazy to me. Like, oh, I can't afford to pay my house payment, and I weigh 397 pounds, and I'm 4.
Right. So,
but anyway,
that takes me all the way back to I remember. Did you ever see the Super Size Me documentary?
I did,
movie?
Which that is incredibly fascinating. So,
yes,
did you hear about the guy in? I think he was in Michigan or maybe Minnesota that did a like a debunking of that whole documentary.
No, I haven't.
So, for those of you who are unfamiliar with the Super Size Me, essentially this guy went on I believe it was a 30-day McDonald's only diet, and he created some rules, like if they asked him, which this was in the early 2000s, late 90s when he was doing this.
2004 is when it came out.
Yeah, but early 2000s, because I think it had been done for like a year and a half or 2 years when it finally got released and got super big. But yeah, so 30 days, only McDonald's. He had to. McDonald's used to have this phrase where when you bought a combo meal, they would ask you if you wanted to supersize it. And the rule was, if they did ask, which it was kind of a
then he had
part of it, but if they did ask, he had to do the upcharge. So anyway, he does the diet, and it was like, I don't remember exactly what happened to him over, but I believe there was some significant kidney damage, and he'd gained like 35 pounds.
Yep.
Had broke out in acne, and he was in his 30s.
Right. So, okay, here, I got some stats for you.
Okay.
At the end of the experiment, he gained 24.5 pounds.
Okay.
Had a 13% body mass increase.
Yeah.
Increased his cholesterol to 230 milligrams per was it deciliter?
Yeah.
Whatever that is.
Yeah.
He had mood swings, sexual dysfunction, and fat accumulation in his liver.
Wow. Yeah. So obviously he did not have a good go of things. But so here's where things get really interesting. So after that came out, McDonald's got
he was also not allowed to walk more than 5,000 steps a day.
Really?
That was because that was like the average amount of steps that an average American walked in a day.
Okay, I didn't know about that.
So right, so that was part of it too.
So some of this information came out after the documentary got super popular.
Right.
So yeah.
So 3 meals a day, breakfast, lunch, and dinner. Right.
All
he
McDonald's.
consumed every item on the McDonald's menu at least once over the course of 30 days.
Yeah.
Only items offered on the menu, including bottled water. And yes, like you said, he would supersize if it was offered, but not at his own request. He was supersized a total of 9 times, 5 while in Texas, 4 while in New York.
Okay.
He will attempt to walk about as much as a typical United States citizen based on a suggested figure of 5 standardized distance steps per day. But he did not closely adhere to this as he walked more while in New York and Houston, which is not really surprising. Okay. But I do remember part of the video him talking about having to like call cabs or whatever because he couldn't walk any further.
Yeah, and I believe his triglycerides actually spiked, which is like, I think that's your blood sugar stuff. I don't remember exactly what it is, but I think that was one of the ones that had gone up significantly. And that was because people don't know this, but the amount of sugar that McDonald's puts in its food is astronomical. It is like comical amounts of sugar I mean in a burger. So anyway, here's where this gets really interesting. So McDonald's got reamed for this coming out, and like there was which I think a lot of those items have fallen off the menu because McDonald's realized that people talk about that, but you're not going to McDonald's to eat a salad. It's just reality. So there was about a 10-year stretch starting in about 2005 to about 2015 where they had a lot of health food options that they have largely gotten rid of because, if you're going to McDonald's, odds are you don't care. Like that, people vote with their dollar. So that was what they were doing is, I know that a Big Mac is terrible for me, but I'm going to eat too. So, so anyway, I don't know exactly when this happened, but there was a guy who, and let me see if I can find it real quick. While
you're looking for that, by the way, the Wikipedia here says that 6 weeks after the Super Size Me film debuted, McDonald's discontinued their supersized portions.
Yes,
even though they claimed.
It was immediate. They got so much backlash because they basically everybody said McDonald's is just making Americans fat, which it wasn't entirely on McDonald's. They were just selling products that people wanted to buy.
I mean, yeah, McDonald's can't shove the food in people's mouths as much as I'm sure they'd like to.
Okay, here it is. Yeah, so he was a I don't know what he did, but he wanted to prove that Super Size Me was basically a load of crap. So what he did was he went and evaluated McDonald's food. I think he was a teacher and was trying to prove to his students that it was not about what he was eating. It was about the quantity of what was being eaten. So he ate only McDonald's food for 6 months. His name was John Cisna. 6 months, only McDonald's. He had a daily caloric limit of 2,000 calories, which is standard for the average adult American male. He looks like he's probably in his late 40s, early 50s. So he's not in his prime of life or anything like that. He walked 45 minutes a day and mostly ordered items off of the dollar menu. In 6 months, he lost 56 pounds, only eating McDonald's. His cholesterol improved, and a handful of other blood markers improved significantly over that time frame. And he was only eating McDonald's. So essentially what he proved, that as long as you try within a certain margin of error to stick within a decent number of caloric intake on a daily basis, and more importantly, he had the 45 minutes of walking every day, you'll be fine. I think what he proved is the reality is the walking was way more important than the eating McDonald's. Because most of the time McDonald's is not going to be the best food on the planet for you. It's not going to be your most healthy option. But he made it very apparent that you can still eat that stuff as part of a moderately balanced diet, as long as you don't go overboard with your calorie count, which is not impossible to do. So, I just thought that was incredibly interesting because, McDonald's got all this backlash, and the reality was he was eating, I believe somebody went back and calculated out the average meal, because they have the video, they can go look at what what it was at that time. And the guy who did Super Size Me, I believe he was eating 3,500 to 4,000 calories a day. Which, obviously you're going to gain a significant amount of weight eating that quantity of calories,
Yeah, dude. Yeah. Especially if you're not doing hardly any exercise.
And forcing himself to limit the amount of walking that he did made it even worse.
Right.
So, just keep that in mind.
That's why it's
you can eat
important
McDonald's
to
all
move.
you want, as long as you're not eating too much of it in a day.
Yep. That was one of the big points that Dr. Capert made in his actually makes in all his videos.
Uh-huh.
Move. You got to move.
Get out there and move.
Get out there and move.
Yep. Well, I know we kind of got derailed from your original point. I hope we covered all you were wanting to talk about. There was a lot of segues in that one. There's been a lot of segues completely today. We've been
speaking of the segue guy. Maybe we'll save that for another week.
Yeah. Oh man. But so that's all we've got for this week. So thank everybody for stopping by. And I believe I said last week that we were going to have Aaron from the Lawn Tools on this week, and there was a scheduling conflict. So I believe we're doing that as of today. That has been moved to next Tuesday for our recording session. So we should have him on next week. So stick around or tune in, and we'll hopefully have some great conversation and a good interview for the the other side of the coin for the lawn tools. And
Yeah.
Yeah, that's it for this week. So go out, please, for the level of engagement. Go out there and fondle that like button and
Yes.
and ram a few comments in our comment section if you can. We would love
Stroke
the
that
engagement.
notification bell.
Yeah, exactly. So we are trying to get more consistent. So my plan is for us to have a new episode of the main long form podcast on Wednesday morning, to launch at 9:00, and then obviously we're starting to put out some tips, just tips for some daily in content as well. So
Just the tips.
yeah. So if you like that format, let us know. And if you have any anything that you would like us to talk about, we're looking for new topics and things like that to review and keep things fun and interesting and educational from men's health, financial advice, accounting, tax, all that jazz. So
Yeah.
so anyway, yeah, thanks everybody for stopping by. And what's your catchphrase, Mr. Dick? Is it go out there and have a good one?
Go out there and make it a great one.
Make it a great one. Yes, it's on you. So yeah, today's a new day, so go make it a good one.
You can do it.